Yo, what's going on, guys? Bexio back, and today we had a brand new video on Bitcoin and how these inflation numbers that just came out are just forcing people into Bitcoin and making Bitcoin extremely more valuable. So this is the inflation CPI index, the numbers that came out, and you can see a bunch of this stuff is absolutely insane. So the average stuff is 5.4%. That is the highest inflation in 13 years. That's record breaking, and it is the highest since 2008 and the recession, and it is just absolutely going crazy. And right now we also see that I think the CPI numbers are a little bit lower than what actual inflation is. We have been seeing that CPI kind of gets messed with so that it can look a little bit better than it actually is. And I think inflation is actually higher than 5.4% by a decently substantial margin. And it is absolutely going off the charts with how crazy this is going. And on top of that, to get out of this hole that has already been dug by all this money printing, it really does look like the only way to do it is to continue printing more money. So we'll see how that ultimately ends up, or if they continue to do that. But with inflation numbers like these, we are seeing a lot of people kind of get back into Bitcoin. Obviously, people wait for these numbers and then seeing if something's crazy, we'll get a big jump into Bitcoin, and we kind of saw that with the price right now. So it is actually looking like Bitcoin's at just over 57,000 right now. And you see just crazy amounts of volatility. All that we had even yesterday from almost 58,000 all the way down to 54,000. So basically $4,000 swing in a day. Even today, 54K for the bottom, and then 57.5 for the upper half. Just lots of volatility happening, and I think it has to do with the leverage and derivatives market and margin stuff. So we're gonna look at that types of data, which actually looks pretty good. But even right now in the chart, I mean, not a significant amount going on. You know, we've kind of just been trickling upwards, couple red days here and there, a lot of volatility, but ultimately we want to get to $59,600, test this line, see how it interacts, and then after that there is just nothing until new all-time highs at $65,000, and then we're back in price discovery, seeing exactly how everything's going to play out, where the price can go, how the end of the year can shape up. And of course, we got to look at the hash rate, a very leading indicator of the price, I think. So you see this huge recovery and rally, and actually a decent little pullback here could be the reason for the volatility, or could have led to a little bit of the volatility. Obviously, the hash rate, a little bit of a leading indicator, and kind of interesting to see the hash rate drop on top of the price dropping and getting volatile, and now we're kind of back. But this 150 is this last kind of leg to get over for the hash rate, where we kind of bounced and leveled out for a bit to another plummet, where get to here, get above here, and then I don't think it'll be long until the hash rate gets to new all-time highs. And then when the hash rate does that, because it's very intertwined with the price, I think we'll see the price rally very quickly with the hash rate to new all-time highs as well. And combine the prices that we're seeing with the amount of hype or trends or retail frenzy that we're seeing, we are just not seeing it at all. So this is the Google Trends for Bitcoin for the past year. You see, in the beginning of the year, we were kind of peaked. We had lots of interest from people. Bitcoin was mainstream. Everyone was talking about it every day, basically. And that kind of tampered down to another spike in around the middle of the year. And now we've just gone down to basically no hype, no one really talking about Bitcoin, searching Bitcoin, wondering about it, doing all of that. So that is interesting to see that hype and searching trends for Bitcoin at basically yearly lows for this year, with the price recovering and up 90% from its fall down to like 29K, and going from there, going to now challenging all-time highs basically with very low hype. So obviously I think we'll see trends and people searching for Bitcoin spike again when Bitcoin is able to get back to its all-time high and even challenge that or get on its way to there. We'll see a lot more talk and hype around Bitcoin. And for the margin data, I actually think that the this like leverage looks pretty good. We've seen longs just collapse, which isn't a bad thing because it leads to less downward volatility. So longs, I mean, this was over 42,000 long, not even like a week ago, and now we're seeing it at 27, almost 28,000. The longs fell like off a cliff. This is the past 2 days for this data here, but even when you look at, you know, the amount liquidated, it has been a lot from the longs. There's been 19, almost $20 million liquidated in longs compared to 3.5 million liquidated in shorts for the past 2 days. So, you know, we see this types of move up to 57K and this move down maybe triggers some liquidations, who knows. But shorts have actually exploded. They were 900, 800, and they were actually up to like 1300 and came down to here right now. So this to me looks like we could look for a short squeeze setup, kind of downward volatility not being punished as much as upward volatility. So if this price was to go to 58K, we'd see it probably skyrocket and try and hit 60K a lot sooner than if this price went to 53K. Like we saw, it triggers liquidations, does all that, but it doesn't have major effects on the price because you see it goes down to that price and then we're right back up, especially after the CPI information. And just to zoom out a little bit for the week, you can see the longs really just collapsing, 32.6K basically to where we are now, 27, 28,000, and the shorts kind of having a huge spike from 920. They got all the way up to almost 1,600 before starting a little bit of a downtrend. But shorts definitely could be pushing the price down, attempting to push the price down, but ultimately I do think they'll get punished in an upward rally and be liquidated, forcing it to go up even more in price, whereas longs at this point will not punish the price as much. We've seen the price be very volatile. If there was extreme amount of longs, the price probably would have got punished very bad. Looking at some like on-chain stuff, this is pretty interesting. The long-term holders supply is currently increasing at between 13 times and 15 times Bitcoin issuance. In other words, long-term holders are stacking sats 13 times faster than fresh coins are being minted by miners. So obviously this is going to push the price up. This is going to make a lot more or a lot less Bitcoin coming on the market. And this can be even combined with the miners themselves. So long-term holders, if they're buying Bitcoin 13 times faster than what Bitcoin comes on the market, and then add on top of that that miners aren't selling all of the supply that they're mining, or even the majority of it. They are mining and holding a lot of Bitcoin, much more than the majority that they are actually mining. And we saw that with Michael Saylor had a report with a mining company. They mined some crazy amount of Bitcoin, like 12,000 or something like that for a year period. And they actually only sold like a couple hundred to fund things. And we're seeing that with miners because they are publicly traded companies. Miners can now raise money to fund themselves through through the public markets, through the stock market, through debt, through bonds, and it's just a lot more things that they can use to fund themselves than the Bitcoin they're mining to pay for bills, the utilities they use, and they continue mining Bitcoin. So combine both of those together, you get a very bullish environment for the price. Obviously, demand much higher than supply, and on top of that, supply is not getting added as much as it should be, or as Bitcoin's issued, because miners are holding Bitcoin instead of selling them. And just an interesting thing to end the video off here, the United States has overtaken China as the leader in Bitcoin mining by hash rate. We saw this earlier in the year. China banned Bitcoin mining. They kicked out all the miners. They were destroying mining equipment. Recently, they banned Bitcoin transactions and any crypto transactions in the country. So, you know, China is just trying to get rid of Bitcoin, and it's the best thing that could have actually happened for Bitcoin, because it just adds to decentralization, gets rid of the China FUD that everyone wants to talk about, moving everything out of China, getting it all out, spreading it out across the world, and the US is benefiting from it because the miners are coming to the US for a lot of them. But that's going to do it for this video, guys. A little bit of things going on in Bitcoin, not much though. Margin data looking pretty good. The chart getting boring. We're kind of in a little sideways slump here, but I think we'll probably see new all-time highs relatively quickly, a lot quicker than some people are probably expecting. And then on top of that, inflation being absolutely ridiculous, people are just going to be more and more interested in Bitcoin and protecting their money. So as always, guys, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next video.